And in Kenya, the government says it is targeting a 7.2% economic growth rate in 2027, a faster rate than last year's growth of 4.8%. The Principal Secretary for Planning in the Ministry of Finance, Mr. James Mohati, said this at the launch of government's medium-term development plan, where he said the growth will be driven by higher productivity in the agricultural sector and small businesses. The East African nation is in a quest to boost growth, to create jobs for millions of young people, while also navigating key challenges such as rising debt repayment. The government seeks to reduce annual budget deficits in order to reduce debt repayment and create space for much-needed investment. Asian markets were trying to find a firmer footing today after a rough week, hammered by concerns about China's ailing economy and fears of U.S. rates staying higher for longer as long-term bond yields surge. MSCI's broadest index of Asian Pacific shares outside Japan was up 0.1% after hitting a 9-month low in the session before. It, however, headed for a weekly loss of 2.8%, the third straight week of declines. Japan's Nikkei lost 0.4% and was down 3% on the week. Chinese blue chips rebounded 0.2%. Hong Kong Hang Seng fell 0.3%. China stocks have shed 10% from their high in January as they smell economic data and laid bare the startling post-pandemic recovery, with investors remaining unimpressed with just piecemeal support measures from policymakers. And following Chinese tariff hike, production and export bottlenecks during the COVID-19 pandemic, Australia's wine industry faces oversupply problems that will take years to resolve. According to Rabobank's third quarter wine report, vineyards have enough wine in domestic storage to fill 859 Olympic swimming pools nationwide. There are over 2 billion liters of wine, or 2.8 million bottles, which depresses prices, particularly for commercial red wines. These are battered the wine industry, with exports to China shrinking to just Australian dollar about 8.1 million. That's $5.2 million compared to Australian dollar 1.2 billion in January 2020 before the pandemic. However, the recent removal of tariff on Australian barleys has given hope for early easing of the 5-year tariff China's imposed on Australian wine in 2021. Now, chocolate makers face tougher trading conditions over the next year as they attempt to pass on soaring cocoa costs to cash-strapped consumers who are cutting back. The industry has enjoyed bumper profit over the past couple of years as demand for chocolate held up despite price hikes. But the new data shows that this might end soon, just as prices of cocoa hits 46-year high and sugar prices are near their highest in more than a decade. Consumers in Europe and North America have already seen price increases of about 20% over the last 2 years and are starting to cut back on the amount of chocolate they buy. Cadbury maker Mondelez CEO Drake Van de Poot said consumers are shopping around more, hoping to find cheaper deals.